Hello and welcome to the FOMC December video preview. So at this decision, not only will we have the monetary policy statement from the FOMC, but they also released their summary of economic projections and there'll be a press conference from the Fed Chair Yellen. But despite this, alongside the summary of economic projections, you have the dot plots. All focus will likely be on any potential changes to the statement, and in particular that phrase where the Fed said they will keep rates low for a considerable time. So if they decide to remove that pledge for keeping rates low for a considerable time, then it will likely be seen as a hawkish move, and as such could bring forward market expectation of a rate hike from the Federal Reserve. Recent data has been relatively supportive of a more sooner rate hike, with the most recent non-farm payrolls report coming in at 321,000. So that did bring expectations forward of an earlier rate hike from the Fed. However, on the other hand, we have seen that recent decline in oil prices, which has caused some turmoil in the markets. Most recently we've seen the Russian ruble weaken to record lows, as well as other currencies such as the Canadian dollar and Norwegian krona. They're all having a tumultuous time due to the fall in oil prices. And it's had knock-on effects on equity markets as well, with equity seeing some heavy selling pressure, and last week the S&P 500 had its worst week since May of 2012. So due to these financial stability risks with the falling oil prices and the outlook for inflation, this could see the Fed lead towards a more dovish stance, and especially with the press conference from Fed Chair Yellen, where she's unlikely to give too much away and reiterate that the Fed will be remaining patient when it comes to hiking rates, and that any rate increases will be gradual. So not only the oil price fall would have an impact, but you could also see the Fed acknowledge the slowdown in the global economy, with Japan entering a recession in Q3 and the Eurozone coming ever so close to entering a recession, while the slowdown in China also looks to be taking hold, as the Chinese manufacturing PMI came in contraction territory for the first time in 7 months. So it'll also be interesting to see whether the Fed acknowledge this. But as mentioned, a lot of the focus will be on whether the Fed keep that considerable time pledged to the statement. In terms of the projections, it's likely that they will revise slightly lower their inflation forecast due to the falling oil prices, but they will also likely revise lower their unemployment after that non-farm payrolls report and the continuing fall in the unemployment rate we've seen over the last few months. However, the GDP expectation, that's unlikely to be changed too much, as well as the view of the Fed funds rate at the end of 2015, 16, 17 and in the long run. Anyway, that's all from me. Thank you very much for watching, and I hope you have a great day.